Greetings traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for May the 25th to 29th, 2020. And so I will have to give this week to the bulls. So the bears did their best to try to pull in the markets this past week, but as usual, the bulls took every pullback as an opportunity to load up and buy. We are still in a strong uptrend going into the final week of May, and so far the prophecy or the adage of selling in May and going away hasn't come to pass yet. Now obviously the sell in May effect goes for the rest of the year, but the month of May has not been a bad one so far for the buyers. So as I mentioned already, we got one final week left of trading for May. It is a shortened holiday week this week, by the way. Happy Memorial Day weekend to all my US listeners. So this coming week will be a shortened week. So the econ calendar is fairly heavy in some days because of the shortened week, but we have a slower earnings calendar. So let's get into that, and then we'll get into the charts. So first off, because the American markets are closed on Monday, we have no econ news that day on U.S. stateside. So on Tuesday, things kind of kick off. We got that U.S. consumer confidence number. People are going to be looking at that to see how that number is faring. U.S. home sales also on Tuesday will be interesting to watch. The mortgage market and the home sales market is one that a lot of people are watching now to see if people begin to get back into their normal state of affairs. Then on Thursday, pretty busy day. We've got that U.S. GDP number, that once a month number that comes out on the last Thursday of the month, and that will be interesting to watch. We have also the jobless claims number. That number continues to be fairly high. This past week we had another 2.4 million jobless claims, so still very, very high numbers. Everyone's waiting on that number to see if that starts to recede a bit, especially now that the economy begins to reopen. The question is, do things get back into the groove of that normal groove that we had in the past, or do we see a lot of businesses not reopen because they've been shuttered for so long? That's the news now, where maybe a lot of small businesses, even though the economy is reopening, they may not be able to reopen because the lack of working capital. And finally, on the Friday, got Jerome Powell speaking, and folks will also be watching that personal income and outlays number at 8:30. Now, earnings calendar wise, slightly slower week. Again, nothing on Monday to report of, but on Tuesday we do kick off some interesting names. PLAN, software company. The stock has been flying. I'll show that one later on. Wednesday, you got HPQ, which is Hewlett Packard. After the bell, we want to watch Toll Brothers, interesting one. Ralph Lauren, just as a good read on the retailers, be interesting to watch. Thursday, I'll be looking at Costco. Costco's got a very interesting chart setting up. I'll talk about that later on. You got Salesforce.com, so CRM, NIO, Chinese car company. That'll be a good one to watch as well, because that should be a high beta name with trading. Workday, another cloud name to watch, and ZS, another cloud name to watch. And Friday, very quiet day, so nothing really there. But again, just make sure you're not trading those ones that are reporting that day and not aware of it. So let's launch into the charts now, and let's see the week that was, and perhaps divine where we're heading this coming week, because this week was a very tight week. So even though I said in the beginning that I'm going to give the week to the buyers, for the most part, it was a pretty indecisive week. And the reason why I'm giving it to the buyers this week is because the bears really did their best to try to sell off the markets. Basically, we had a number of days where we sold off in the morning sessions, but then the buyers basically stepped back up again to buy it back all the rest of the trading day, just for the bears to take control again near the end of the session. This happened 2 or 3 times this past week, where we had this sort of pinball back and forth, where you had weakness in the morning, then the buyers would buy it back, then a bit of weakness near the close, then you'd rinse and repeat again 2 more times this past week. So the big picture though, let's get into the charts now. VIX, here we go. We have a inside bar down so far. I'll zoom in a bit here. It's kind of tight, so I'm not going to belabor it, because the Bollinger Bands are, it's come from such a wide wide base here, but basically inside month and down still. So the sellers are still in control here on the sell side for the VIX. We have an outside bar and down inside bar condition. So you got a momentum down condition right now. This past week was just a pause in the action, consolidation. So that's the past week. You remember, sorry, in the last week's video, if you recall, I said how you get outside of this past week's range. On the VIX, you did not. So look how tight that trading was, and this, you can kind of account for it being a week that goes into a holiday. Oftentimes it gets very, very slow, and we had lesser volume this past week than some prior weeks. So inside week this week for the VIX. Now we really want to see how we break this range, right? If it continues to break down, right, goes inside bar down, there's your continued momentum move, your momo down move, and you got that unfilled gap right there, 29.82. Otherwise, you break back above, and you got that possibility of that momo reversal now. It basically extinguishes the downside reversal, and it tries to come back up again. The issue is that you only got one, basically less than one trading week this coming week, 4 trading days, and you're below the quarterly open, the monthly open, and wherever we open on the week. So if you open up high here and then you sink down, you're gonna be below all these time frames. This means you're gonna have full time frame alignment to the downside if it doesn't keep going up. You have to get above that monthly open. Looks like it's gonna be pretty hard with only 4 trading days left in the month. So on the daily chart is what we have here. So very tight action. Look how tight that is. So 1, 2, 3, 4, 5 trading days. Okay, so you gap down. All right, opens in the range, comes back up, did not fill that gap. So it's an unfilled gap right there now, did not get filled. And you can just see how tight that trading is, right? So it's really going nowhere this past week. VIX again, just kind of consolidating right now. But yet with the holiday weekend, maybe the narrative is that people do want to protect themselves a bit going through the long weekend, so they are buying some puts just to make sure that that they're not exposing themselves to too much long weekend risk. So on the daily chart, there's your very, very tight trading action, outside, inside, outside, and up. All it takes now is for this thing to break below here, below Friday's lows, right? If you break below Friday's lows and you break below that low there, you come after that pivot there. That pivot there is this past week's lows. Okay, if that breaks below, that'll create the inside bar down on the weekly chart. So that's what we're going to be looking for on Tuesday, excuse me, is if you break below this low, that low right there, right? That's Friday's lows. Okay, it's going to go after that pivot right there. That is the weekly low. And what do we know about that weekly? It's an inside week, right? So we're looking to break that inside week with an inside bar down sequence. So that's what it would look like on the 2-day chart. Is all you got to do is take out that low right there, and then that pivot will get into play. Now, if the buyers step up and they keep going here, it's momo up right now, all right? So even though it's a red bar on Friday, if they push it above here on Tuesday, it's momo up, and they could break it to the upside there. So we're really waiting to see how we break, on which side of this range we break, and that's going to give us a lot of information. Thing is that even if you go long, it's not like it's going to be massively bullish. Eventually, sellers are going to come back into the VIX again, because this thing is in a downtrend. I don't know if you can tell or not, but it's in a downtrend. You have a series of highs that are lower, all right? Lower highs, okay? And you're getting lower lows, right? So this could easily come back down here, take out that low, and then you got your 29.82 gap unfilled right there, okay? So the bias is to the downside because all the time frames are pointing down. Red quarter, red month, and depending where you open up here, even if you get a pop up here, right? Even if you get a week up, you can come back in again because the bias is still to the downside until you can get above these wider time frames. All right, so that's it for the VIX chart. To show you how tight it is, here on the 2-day chart. Think how tight the sequence is, but this is what you need to see. Outside bar up. This is a 2-day chart, so outside bar up, down. Once you break below there, that's that extinguishes your momo up condition. Now they're slowly grinding back lower to take out that low there. So that's it's playing out, but it's just playing out very, very slowly, just given how tight this past week was. There's your VIX chart. Now we know that. Let's talk SPY. Okay, on the SPY chart we have the following. So the SPY now went inside month and up. So it's broken the upside now, and like a lot of charts, for a lot of stocks you'll see out there, a lot of stocks are beginning to make their move back up through this broadening formation, right? You took out one side of this range, they come back out the other side now, and that's what's happening. This also coincides, not surprisingly, with the lower Bollinger Band. So oftentimes, and if you don't know about Bollinger Bands, one important understanding of the Bollinger Bands is that very, very often when you get a test of one side of the band, if it doesn't keep going, at some point it's going to test the other side of that band. All right, and that's what's happening now. Look, it hit the top of that band. That creates the broadening formation, right? So that's the high. That's higher than prior highs. So you have higher highs. Then if it cannot continue and do the Bollinger Band walk, it gets to the other side of the range. That's what happened here back in the month of March. It could not keep going, right? It found a bottom, and now looks like we're going back to the other side of that broadening from that broadening formation and the Bollinger Band. Same thing down here, right? We had that sell-off back in 2018, December. Hit the bottom of that broadening formation, the bottom of that Bollinger Band, and boom to the other side. Okay, so it doesn't mean just tap here; it's going to immediately go down there. It means that once there's a tap, at some point, if it does break down, there's a chance it's going to go the other side. It doesn't mean immediately, like you get a tap here, all of a sudden it's going to break down. No, it's the possibility of it. It doesn't tell you. The Bollinger Bands don't tell you when things are going to happen. It just measures volatility based upon standard deviations. But then it ends up being sort of self-fulfilling, because traders are gunning for those other sides. Okay, so I don't think there's any magic in the Bollinger Bands themselves, just that there's just enough traders looking at them, and they're using them to basically create relative terms around what is maybe oversold or overbought. Okay, so there right now, price action wise, this is what we're following. That's what's going to tell you, where things are, what is happening and what's likely to happen, and when to get into these things. What we see now is that we had the momo down condition on the month. There was consolidation here for the month of April, big consolidation bar inside month though, and now you got a break above that. It's actually trading above April's highs. So now we're going back through this range, looking very likely that we're going to hit those all-time highs again, if the SPY follows the path that a lot of individual stock names are doing. So onto the weekly chart. You got that momo up condition, so the momentum is back and forth. Momo up, right? So momentum, so outside bar, and they broke the prior bar's high, closed week green, although very small week, only up 3%, 3.2%. But again, a winning week for the buyers, all considering, right? So let's redraw our ranges. We'll grab our purple lines here, and it continues to be momo up so long as the buyers do not let the sellers break below this past week's lows. Right, so we had that momo up condition back here, got extinguished very briefly this week, this week there. But look, going back into the end, March 23rd, remember that week there? We talked about it in the videos when this was the weekend where Neil Kashkari from the Fed went on 60 Minutes and basically said the Fed has unlimited amounts of money, right? So to support the financial system and the economy. So you don't want to battle the Fed. that's traders have been taught that and have been habituated and conditioned to not fight the Fed. And when the Fed says they have unlimited money and they're going to pump it into the markets, that's what you get here. Momo up, up, and then finally here you had a lower low. But look, the buyer stepped up right back right away. Outside bar, momo up again. The momo up is back in effect. Okay, on the SPY as well as all the other indices. So on the SPY side, here's something to take a look at here. So actually, I do want to show one thing before I remove these lines, because it's an interesting observation and something you should watch for. Is this what's actually happening here? Okay, so here, that purple line is the prior week's highs, right? So if you break above the prior week's highs, and we know that's an outside bar, right? So we go back to our weekly our bar here. That was the outside week, right? So we know if you break above that week's highs, that creates the momo up condition, and that happened right away here on Monday. So you break above the week's highs, the prior week's highs, but doing a big gap up. It was a big gap up, right? And it kept on going. So on Monday you had a 3+ return. The issue, as I've always said in these videos, is you never want to chase price. Like that's a recipe for getting stopped out. Anytime you chase price, you get that FOMO, that FOMO trade in. you're gonna get stopped out because you're the last person in. Anytime you're chasing price, you are the last trader in. Okay, so because literally, well, this is the understanding. There are people who are, if you're getting in here, you're probably like one of the last ones to get in because people got in down here, right? And they're offloading on the gap, right? Because when you get a gap like that and it's hitting the top of that Bollinger Band, you're getting everything you could want if you're already long down here, right? This is the perfect place now to unload some and you know, and take some profits and maybe hold the piece, because now you're basically up, and the worst you can do is break even if you put your stop down here, correct? So this here is a free trade for folks who are long from down here. If you're getting long up here on the breakout of the prior week's high, right, price will always pull back on you. Okay, that's just the nature of it, because people are profit taking up here. There's no longer enough buyers for this thing to keep going. So here, if you put your buy up here, immediately it goes against you the next day. Now that's just showing you that your trade location isn't great. Now in this case here, the dips are very, very shallow because right now the trend is so strong. We know it's momo up right now, and the trend is very strong. But even then, when trends are not this strong to the upside, this could have been a multi-day pullback and you would have gotten stopped out of that trade. It could have easily come back in down to here, retested this initial breakout area, and anyone who got long in this sequence would have got stopped out. This week was very, very strong once again. Look, that 200-day moving average, we pointed that out. We finally closed above it, broke below it, and then look, for the rest of the week, we stayed above the 200-day. See that 200-day moving average, this black line there? Look, we haven't closed above the 200-day, you know, prior to this week since way back here. Right? It was way back in March. So we've reclaimed that 200-day. That's significant for a lot of traders. You know, they're waiting for price to get back above there before they get aggressively long again. And this week, you know, they held it up there for one session, then closed below, 2, 3, 4. All right. But look what happens here. So you buy, you know, you get, if you buy in here, you add too much size, you're gonna get stopped out because you're too leveraged. And you know, here's the understanding, is that pretty much everyone who trades is over leveraged. So if any small move, if you're too leveraged, you're gonna get stopped out. So a lot of folks got stopped out in this move right here because they were hoping for a move to just go gangbusters, and it did not. So some folks got stopped out on this pullback, and then pops up again, and they chase. And this pop up here on the Wednesday, look at that little green line up there. That's a gap. That's a gap that was from way back here. Look, March the 6th. Okay, so we finally got that gap filled now, so we can move that gap. The next gap there is there. Okay, the gap there. I'm gonna just draw in one more gap because there's one more here. Another gap right there. Okay, so we have our gaps drawn in now. Make sure that's in the right place. Okay, and so that we saw that Wednesday filled it, and then on Thursday, Friday they pulled it back. All right, but look where they retest. They retest the prior week's high. Okay, so that's a retest of the prior week's high. The prior week's, or this week's open, the purple line, that's the weekly open. That's where price opened on Monday. They tested that, and then they bought it back from there. Okay, so that's, you know, a very, very common. These are very common levels that you want to be looking at, and this is a very common sequence to be looking at. Anytime you have breakouts, and this applies on any time frame, not just the weekly. Anytime you have this kind of condition, where you're breaking outside bars or inside bars, price will often do this type of sequence where you're breaking up, coming back in, stopping people out, going back up again, and then retesting the area. So stopping out any weak longs, and now all it takes is for this high to get taken out on Tuesday. You take out Friday's highs, we're going gangbusters back up again, because that's a reversal. All right, so you have a 2-day pullback, one lower low there, one lower low there. And if and when we get a higher high, so maybe it's not on Tuesday, maybe it's Wednesday, it keeps going lower, maybe it tests the 8-period moving average right here. If you get a break above a prior bar's high, then they're going to come back up to this range and take out these guys who got short here. Okay, so very nice sequence there. You know, that's the those are the scenarios to watch out for if you're going to be you know, if you want to be buying these dips. And for now, you know, that roadmap or that that strategy of buying dips, it's you know, that's the right place to be playing right now, because the long side is certainly easier than the short side. That being said, what we're doing now is we're ultimately seeding the seeds that are going to end up creating the next big sell-off, because right now buyers are getting rewarded to buy dips. they're getting even rewarded to hold on to crappy trades because the market is saving them, right? So right now you can get away with bad trade location because the market's drifting higher. In other times you cannot get, the markets will not save you. But right now, because the market's so strong, people are being reinforced for bad behavior. That is, they're chasing price, and price is not going back significantly and stopping you out, and so people are not taking stops, right? So they're letting their positions go very, very loose. They're not taking the stops because they don't have to, because the markets are drifting up. Eventually, that type of behavior is going to result in very negative outcomes, because eventually, when price starts to get volatile again, you're going to see a day where people do not take any of their stops. The moves, people are over leveraged because the moves are getting smaller and smaller, and they're trying to capture smaller and smaller gains. And all of a sudden, you're going to have a day, you have a big gap down or a very big sell-off day, and folks who do not take their stops, they're going to get hit very, very hard. They're going to hit very hard, and then the buyers will get very burnt that day. So for now though, because of this slow upward drift, you can get away with a lot, but the markets will not always be this way. Remember, the markets are very, very good at reinforcing bad behavior, and that's why sometimes traders can get in big trouble because they don't do what they are supposed to be doing, i.e. taking stops or carefully using the right position sizing, because the markets are letting them be careless and not punishing them. But the punishments come later. That's the tricky thing sometimes is, sometimes you can get away with doing the wrong thing for a long period of time, but all it takes is one big hit. And like they say, you don't want to be stepping in front of trains trying to pick up dimes when you have a big train barreling down on you. All right, so that's the understanding and the distinction. Let's keep going. So for now, on the SPY chart, so what we want to look at. So remember in the VIX, we had that very tight inside week. Well, the SPY did not have that, right? We had that outside bar up, that momo up condition. But here on the SPY, you see that this had already played out. Remember on the VIX, we had that I'll just show you real quick if you don't remember. You had this condition here, outside bar up, right? And the VIX is still trying to come down to take out that pivot low. The SPY, on the other hand, it already took out that pivot high on the other side, right? So all the indices did that. SPY, Qs, I believe Dow did it too. So here, outside bar down, and look, went up and took out that pivot high. That's was the immediate pivot in the vicinity that it had to take out, because they knew there were stops there, and it took out those pivots. So now it's just kind of a tight trading. So for now, as I said earlier, this is what we're waiting for to see. If you go to that 4-hour chart, and now we can redraw our levels. Does the momo continue on the weekly chart? We get that momo up condition continuation, or does it pull back and extinguish that momentum? But on the 4-hour chart, outside, inside, and down, you can see that then it created an inside bar reversal, inside bar down Friday afternoon, inside bar reversal back to the upside again. Looks like it's going after that pivot high, and then that could trigger the continuation of that weekly move. All right, so there's the SPY. A little faster now. Let's go to Qs. Q very similar, but a lot stronger, obviously. Qs, here we go. Outside bar down, last one more down, then up. So now Qs, based on Friday's close, less than 3.5% away from those all-time highs. So looking like it's a very, very high chance now the Qs are going to get back to those all-time highs. Okay, so there we go on the Qs. Momo up, second week in a row now of momo up. So that's your first momo up week. Here's your second momo up week. Good green week for the Qs, up 2.86%. On the daily chart, looks very much like the SPY. We took out some gaps, so there, that gap got taken out. That gap there was from all the way back here, Feb 21st. See, so that gap finally got taken out. All right, so they took out that gap. We can get rid of that line now, and now we have an unfilled gap right there, 234.78, and then we're very, very close to those all-time highs, getting very, very close. Okay, and so on the Friday chart is a green day. And now you got the outside bar down. Okay, if you break above Friday's highs, they're going right after that pivot there again. Okay, and the range. So I'll just draw in that weekly range once again, just to show you. So this past week was that week there. So I'll just draw that so you can see the daily chart. Notice this same pattern as I talked about before. Okay, so here, gap up, gaps up. So 3 up days in a row. So that momentum worked on the Qs. Then it comes back through, right? So that's what happens when you chase. You get it like this where all the week longs get stopped out. nothing wrong, chasing. Just you just have to know that this can happen, right? So you have to be alert to the fact that you're basically the tip of the sword, and the first people to get stopped out are those guys who are leading the charge. So you are leading the charge if you buy breakouts. So that means you need to be one of the first ones out. Otherwise, you're gonna get taken out, or stopped out. So outside bar down, momo down, but all it takes now is to take out that pivot high for things to get back up there. See that high right there? That's right. That's the weekly high. So that will continue that momentum move to the upside if Thursday's high gets taken out. Then you test this here. Look, right? 1, 2, 3 up days, outside bar down, and this tests the purple line. What's that purple line? Yes, the prior week's high. So that's the level once again to all to all of you watching. The prior bars highs for breakouts, the prior bars lows for breakdowns. Let's talk about Dow. And a little faster. Once again, we don't have to go through all the nuance because all the charts basically look the same for the most part. Outside bar down, inside on the month. So still inside month of the Dow. The Dow has not been able to break outside of April's range yet. So it's consolidating still. Has not broken out. We only got 4 days left, so maybe it stays inside month. It is a momo up week though on the Dow. So there you go on the Dow, up 3.36%. So momo up now on the Dow. Dow strengthening up, but exactly the same pattern as we talked about before. That breakout and then comes back in to consolidate and stop out week longs, right? So same thing on the Dow. Look how tight that is, man. Can you say just look how tight that range is? That's such a tight week. That's you could say that's going into a holiday weekend. So you can just see by the volume, it was shrinking and shrinking for the rest of the week. We had a busy Monday, then the volumes dropped off steadily for the rest of the week. Russell hanging in there, also doing double inside month so far. So inside month for April, inside month for May. 4 days left, right? Can you get outside of the prior month's range or not? If it doesn't, it's going to be another tight week. So here, nice good week for Russell. Russell's actually the strongest one this past week. Up close to 8%. Outside bar up, momo up. So you got momo up on that index as well, right? And as I said, the Russell was the strongest of all of them because you can see by the price. It gaps up, pulls back, right? So there, it stops everyone who does the breakout thing, and then it does 1, 2, 3 consecutive days of momo up. Outside bar up, that's momo up again. This is actually an inside bar, but the sellers did not have within them to break it below any of the prior day's lows, right? So that shows you the buyers full control there on the Russell for pretty much the whole week, even though it's a very, very small week relatively. It's still close to 8%. That just shows how wild the moves have been prior to that. We were getting used to having really, really huge weeks, but that was up plus 7.8%. So on the Russell, that's what we're looking at here. Same thing as the on the rest of the indices. How's Friday's range going to break, right? Because we know the ranges now. So I'm going to redraw this one. If we break above Friday's highs, because Friday closed close to the highs, remarkably enough, that continues the momo. And right now it's momo up on all the indices on the weekly charts. So yeah, that's it's a strong trend up. Do not fight it. That's what I've been trying to say in many videos. Stop fighting the price. For now, the bias is to the long side, and these pullbacks have all been buyable. Now TSX very, very tight. Wow, it's just looks just like the Dow chart. Outside bar down, inside. So inside month still. Weekly chart. Look how tight this week is. Something's gonna happen eventually. Probably this coming week. Inside, outside. Look how tight this week was. All right. Basically, opens and closes in the exact same spot, give or take 2 points. Right. So basically went nowhere for most of the week. So what's that look like? There. I don't know if you can even see that because it's so choppy. Let's see if I use the log scale. Nah, doesn't make it much better. But here, 1, 2, 3, 4, 5. So gaps up, and it just does a bunch of chop around that level for most of the week. So TSX is just doing a bunch of nothing other than maybe Shopify and some banks moving. There's nothing really going on here on the TSX. That is just Flatsville. So nothing to do there. But this coming week should be interesting, right? Because now we can redraw our ranges on the weekly chart, and now we definitely want to see how this small bar breaks. Inside week, what side of this week's range does price break out of this coming week? Because it's such a tight range that I'm sure it's going to break out of that. Question is, which direction, of course, and if it breaks outside of either direction, does it stay outside of that range? Because if you come back in again, that could be a fake out and create another outside bar, right? Because it's very, very possible if it breaks to the downside and all of a sudden comes back in, it come out the other side again, right? So it can go outside bar, inside bar, outside bar. So that's very, very possible with just a few 4 trading days left. So beware of that particular scenario. You still have the bias to the upside though. So look, there's a quarterly open, there is your monthly open, right? So you have that bias to the upside. How can sellers try to change that if they can at all? So let's talk about emerging markets. Now, emerging markets not faring as well as the North American indices. So we did get that extinguishing of the momo, that we had a multi-month momo move, outside, down, down, inside and up here, right? So that extinguished the momentum on the monthly chart for emerging markets. On the week though, we did have a red week. So actually, it's not a red week. So it actually did have some returns here. Had a positive week, but the actual bar is red. Okay, so we have inside and up so far, no low taken out. If this next week's low gets taken out, then that gets interesting. This past week's low gets taken out, that gets interesting. You're still sitting right below that broad information. Look how close that tap is. It comes right there. That orange line there, by the way, is the 20 period moving average. Okay, so there, taps that, and then you're getting very close to that broad information high. I actually need to redraw this a little bit. You can see it's not quite measured up there. And look at that. So just by fixing that, actually adjusting that to this pivot here, to make this right here, I'd actually put it onto that pivot right there. Look, it's a tap right there. So they touched the bottom of that broad information. Okay, and so far been rejected. So emerging markets, and I'll show you some stocks later, some of the Chinese names, they are not looking good. So the emerging markets, something's showing up there. It's causing some unease, and the sellers are more comfortable shorting that market right now. So for now, emerging markets, we want to see how this plays out with this coming week, because the range is very tight there, right? So you want to see this thing, how you break out of that this past week's range. TLT. So if there's fear of people going into bonds, or the yields in bonds so low now that what's the play there? So let's take a look. For now, here's the bigger picture. Oops. TLT, outside bar, inside bar, and down. They did buy it back though. It's not breaking. It broke below, but did not stay below April's lows. Okay, so you got the inside bar down, but pops back into the range. On the weekly chart, tight week again, inside week, right? So we're trading below the quarter and the monthly. We tested the monthly open last week. This week consolidation. So that so far is just a little resting period, because if we break below this past week's lows, that will be a continuation move, possibly to the downside. So watch for that range to get taken out. Once again, full time frame alignment right now to the downside. So watching for that range, see how it breaks that. So very tight stuff there. How about gold now? So we'll go MGC, the micro gold futures, and gold did a fake little breakout there, little fake out. So gold's a little tricky to trade here, because although the higher time frame charts are very bullish, the mid, so the weekly charts and the daily charts are a little bit choppy, because they're going back and forth right now. And gold's one of those things where it's been good to buy when people are selling it, and you want to offload it if you're going to be trading it, that is actively, into strength, because it hasn't been having any sustained moves. The reason why there isn't any sustained moves is because it's an inside month. Okay, so that's an inside month, meaning the price has not been able to get outside the prior month's highs or range. So outside up and inside bar so far for the month of May. Now for the weekly chart, it looked like it was going to do a breakout and continue, but this past week it did get a higher high, right? So the week did go higher, but it came back into the range, and look, it retests the breakout area. That's your breakout area, that prior breakout area right there, and it basically closed right there, right? Look, the breakout area was 1735.5. That's the high of that week there. It closed at 1735.5, so it sits right there now. So if buyers can step up this coming week, that makes it interesting. And what makes it interesting here is this potential sequence. Okay, so look, it goes outside bar. So here's Monday, outside bar down. You buy that if this move here extinguishes the downward momentum. Problem is that there's the weekly open, and that weekly open acted as resistance. So it came close to getting the week green, but you can just kind of see if you take a step back, look how tight that Bollinger Band is. It's actually, it's showing you that it's consolidating, but at this point here, get close to turning the week green. They couldn't do it on Thursday. They sold it off. Friday, they basically consolidated for a full session. So now on Tuesday, if we break above this high, that's interesting again, because then you have the potential to come back up and take out the prior week's high. So I'll draw on the prior week's high here, right there. So here now we get a pullback, break above the inside bar here, and this purple line will be down here wherever we open up this coming week. So if we can stay above that purple line, we'll have that full time frame alignment to the upside. This is always the issue. If you open high, right, you open at the highs of the week and then break below that, for the rest of the week, price is going to stay red on that weekly open chart, that weekly chart, right? So it makes it very hard for people to buy in the pocket, meaning when you're buying it red, right? Because the weekly is red, so you have one less time frame participant who's on your side. So ideally, for gold to really lift off, is it opens lower down here or somewhere in this range, and then they buy it back, keeping or reclaiming the green week. So here's an example, right? So they open up here, and as soon as Monday, this is a Monday, as soon as the money gets red, for the rest of the week, it's a red week because buyers are not able to break above that weekly open, right? Because you have that natural bias against you, because anyone who's looking at a weekly chart will see it as a red chart because you're below that weekly open. Here is opposite, right? You have a green week, it breaks below, but as soon as it gets back into the range again, that's a green week, and it stays green for the rest of the week, right? And you have more buyers who are more emboldened because the week is green. Likewise, anytime you have a week green and it stays green, it's hard to change that week red. Anytime though you start week red or start week green and you lose that green week by selling off, or by, selling off is a strong term, but by losing those gains or by turning the week red and you're staying below it, it's naturally going to stay below, it's going to stay red. You see this week it opened right in the middle there, and then for the rest of the week it struggled to stay above that weekly open. All right, so you'll see this across all asset classes, just the nature of how people look at price through different time frames. Let's look at one more asset class before we move on to our more fast fire group of stocks. We'll look at BTC. So last week the Bitcoin halving took place. It was a very uneventful event, but we did have an inside week, so we wanted to see how it was going to break that inside week. So the big picture right now, nothing really unfolding here. The issue with Bitcoin is that it's really consolidating, right? So here, outside inside, ideally, as much as I don't like for it to happen, I think it's going to stay outside inside on the quarter. This sets up a very nice trading opportunity in the next quarter. We still have the 38 days left in the quarter, but if we stay outside inside on the quarterly chart, then that sets up for something quite interesting next quarter. So far it looks like it's going to stay outside inside for this quarter, Q2. So the monthly chart, it's outside quarter, right? It's inside quarter right now, right? So you can have to expect reversals. So in the month it goes up, it can easily come back down again. It's going kind of nowhere. To get outside the prior quarter's range, you got to break above that right here, 10,491. That's how would create the outside bar up condition on the quarterly chart. But for now, solidly inside quarter on the monthly chart. Weekly chart, it did go inside quarter, inside weekend up, but came right back in the range. See, so that inside week broke to the upside, but you came back into the range again. So here, if you're buying this, you're kind of chasing, right? Because you're just hoping this takes that out. But this is not as good trade location as someone who got in way down here, as an example, who bought the reversal. They bought the reversal of this sequence. Now, you're chasing in the pivot highs right there. So you're just hoping that this gets there to there and just keeps gunning. But hope is not always a great strategy. Again, you'd rather wait for this thing to pull back in, stop out anyone who got long in this sequence here, and then get long in this area on the weekly chart. On the daily chart, mixed time frames. So it's kind of the story we talked about in the last chart. What happens is, if you open up high and then you get into the range again, and you turn that week red, then it's very hard to change that week, because you opened up high here Monday, Tuesday, sorry, this is Sunday, Monday, Tuesday, red, turn that week red, and now it's in a red week. Even though you have 2 positive days here, slightly positive, very hard to change this week from red to green. You have to take it all the way back up here again and get it back going of there. Not impossible, but right now there's just nothing compelling about that sequence, that setup right now on BTC, given the mixed time frames. It is full time from alignment to the upside though, but sorry, not full time. You're mixed time from alignment. You're above the monthly and quarterly opens, right? But you got that mixed alignment right here. So really, this is just nothing to do except play pinball at this point, as they trade within this little range. So BTC, we'll see what happens there. Nothing remarkable setting up there. So let's talk about some fast fire charts, and then we'll wrap things up this week. Slightly shorter video. Lulu. So let's talk about a stock that's doing well. Start off with this one, Lulu. Look at that, all-time highs. Okay, so very clear that people need their yoga pants while everyone's working from home. So while everyone's working from home and working out at home, yoga pants and yoga related items and apparel doing very well. Look at that, outside bar down. We've talked about this sequence many times already. There's your momo down. As soon as that happened, it took out that high. You come back through the range, took out that pivot high there. All-time highs on Lulu. Again, if one were cynical, you could say, well, I think the coronavirus has been good for stocks, right? For some, certainly. Maybe it has just accelerated the trends. So there's Lulu. So another great stocks. So remember what I talked about last week? We had made mention of marijuana names, perhaps bottoming, right? So we threw out a bunch of them last week. So look at last week's video, all on the same pattern. MJ, so the marijuana ETF, inside bar down, and I said as soon as this breaks above this high there, that's gonna take out these pivots, and you got full time from alignment to the upside. So that was interesting because you also had this on the monthly chart, momo down. That's the high there, that inside bar. If this pattern was going to work, it was going to cause the inside bar up to happen on the monthly chart. That's what happened. So why I had a high conviction around that was because we saw the same pattern on MJ. Meaning, if it was going to work, it was going to work on a few different stocks, a few different names. CGC, exact same pattern, inside bar down. Look at that resolution there, up 22%. And I personally played APHA, Afria, inside bar down, and look at that, back to the range. I was up 20%. I don't know what Tilray did. I think Tilray did well as well. Yeah, a little tighter. This was a momo move. Inside bar up and up. Sorry, inside, outside, and up 32%. So pretty nice for Tilray. All right. So for the coming week, what to look for? Here's a few interesting names. Lyft, been consolidating. So here, inside on Lyft, this thing is going to break at some point. It should be interesting to see how it pops. Looks very similar to what we had with the marijuana names, right? So here, outside bar down. Now whether it happens this week or next week, that's the question. We have that momo pattern that could get extinguished once that orange line, so April's highs, get taken out. So there, we get this. If this inside break works to the upside, we could take out that high, and that would trigger that monthly move. You could be seeing double-digit returns in Lyft in the next couple weeks. Micron setting up. The earnings were kind of weak, but it's so it did pull back after earnings. So where's the earnings on Micron? It was way back here in March. It came up and then came back in again. But all that looks like here on the monthly chart is an inside bar. So kind of the exact same looking monthly chart there as Lyft. You're looking for it to break above April's high. And on the weekly chart, look how tight this stuff is now. Let me redraw these ranges here. We're looking for this. I'll delete some of these lines. Oh, I don't want that line. Let's delete that guy. MU, look at outside inside pattern on the weekly chart. So very tight stuff. Coiling, we like that. I like these coiled types of assets, stocks, or any on these markets, instruments. So outside inside, if this thing breaks, that's going to be a clear directionality. Okay. MU, we got Carvana setting up as well. So here's another one, outside inside, right? So double inside weakness. So people are dying for this thing to break out, because look, a double outside week, now double inside week. So a bunch of volatility, bunch of consolidation. Guess what? The next, once it breaks out of this range, it's going to be volatile again, and it's probably going to go bow directionally. So look for this range to get taken out very, 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 very soon. We want us to watch for that. That's something that's going to be in my radar to see how we break outside of that range. Okay, so we'll redraw that one in purple. Dropbox with a very similar pattern. Outside, well, looks like actually not quite, doesn't quite fit the billing. This is actually an outside up momo condition into highs already. I'm not a big fan of Dropbox. That's not actually not that nice of a chart. What's it look like on the monthly though? Monthly, yeah, that's not one that I'm not a big fan of. So let's remove that from the list. FireEye, this one looks interesting. Inside bar up, so it's already happening, right? Momo down sequence. It took out this week's highs. This week it took out the prior week's highs, and there you got the look at that. The month, so that's the monthly chart. That's the weekly chart. Looks nearly, sorry, I was looking at the monthly before. So outside bar, down, down, down. It got extinguished this past week. Okay, weekly chart. Look at that. Outside, outside, inside, inside. So just like our other chart we were looking at before, right? So that will definitely break sooner than later. So let's draw that. It's right there on the FireEye chart. Okay, so Carvana and FireEye looking very, very similar, right? With the double outside and double inside. Now, how about a couple other names that we had talked about in the past? Actually, pins. Let's go pins. It's another one that's pulled back a bit, but looks like it could be a good buying opportunity here now. Outside bar down, inside bar, not quite inside, sorry, outside bar down, and then it took out the prior bar's high, so it extinguished the momentum. Here in the monthly chart, I think, you know, it is a red month, so maybe we wait till June, but eventually this could, if we break above this high and it stays above this orange line, challenge that pivot high there on the daily chart. If they can get above that orange line, that's the question. That's going to be a good area of resistance here, because it is a red month, right? So that's a red month right here. It's going to be hard to change this thing green to make that chart look better. But for now, outside, double inside, and down. You break above that high here, you come back to the range. Question is, can you take out that pivot? Sorry, not pivot, but that opening area for the month. TWOU, T-W-O-U, interesting pattern here, because I'll show you what happens when these patterns work out. So here on the monthly chart, outside, inside, up, right? So it's going to take out that pivot high. That's why this is such a nice trend. See, it's the outside, inside, up, looks like that on the daily chart. So very, very nice move on TWOU. I think I put that in the weekly video a week ago or a couple weeks ago. And Costco has earnings coming up this coming Thursday, right? So Costco, one to watch because it's getting very, very tight. If you recall on the monthly chart, look at that. Outside, outside, inside, 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 right? So this is a very, very tight sequence now. So it'll probably crack one of these ranges from earnings, but one to keep on your list just to see what happens with Costco. And lastly, let's go through our stars and dogs list. This is really an examination of where the hot money is going and where it's flowing into and where it's leaving. So let's first talk about the stars based upon, again, this is based upon a modified Sharpe ratio that kind of shows the strength of the trends. And so here, my money's been going into these high tech or just tech names. This is a cloud company or a database company, but you see a lot of money going into online retailers, tech companies, enterprise software names, cloud names, etc. So MongoDB, database company, flying all-time highs. Look at that trend, has not turned back, right? Since the month of that small pullback in April, viable pullback, and just gone ever since. All-time highs. MDB, Docu, another enterprise software company. Wow, look at that strength of that chart. Look on the weekly chart, boom, all-time highs again on that one. Fiverr, part of the gig economy. You can buy freelancers or freelancer services here. All-time highs there, so people are using a lot of gigs. Wix, online retailer. All-time highs for Wix. Well into, look at that. It's well above, right, March's highs. So we had that sell-off, sorry, Feb's highs. We had all-time highs back in Feb, right? It pulled back all the way from 156 to 76, so it did a 50% haircut. Then it went 160 to here, closed at 215. So wow, another $90 from the prior highs. up there. So from basically 76 to 215, that's three times 300% return since the bottom there. Twilo. So Twilo, another enterprise software company. Man, these companies have been doing great. Kind of a cloud play as well. So yeah, these names are, if anything, as I said before, the trends are accelerating for certain companies. That means that the demise of certain companies are speeding up, and some of the adoption of other companies is speeding up as well. So cloud companies definitely the big beneficiary of the pandemic. So some of the dogs, where's the money leaving? Where's it not going into this week? Tech data. It's rolling over. Look at this rounded top right there. It really rolled over. It did find a bit of support here. Look at that blue line. That's your quarterly open. It coincides with the 200-day moving average right there, right? And it bounced off of that. But prior to that, though, it's been a pretty ugly kind of trend over the past couple weeks. Etsy, I was doing pretty well until I think Thursday, Friday. Actually, no, right in the beginning of the week, right? So there you go. The sellers came in right away at the beginning of the week. See there? If you open up high, this is a good example. Opening up high and then selling off. That's what it looks like. So you open up high, it comes in. Momo down until Friday. Okay, this is also a reversal. Gaps up. The buyers get everything they could ask for. If they can't defend, it comes into that range, and that's a sell. So there's your stop of that high there, and it comes all the way in until Friday. Bounces off this 20-day moving average, that green line. That's Etsy. Wells Fargo. So banks still not doing great, right? So Wells Fargo probably being the worst of them. The trend is the money's not going in there yet, right? So look at the weekly chart. Yeah, it's a month. The monthly chart is red, inside bar down. Money's not going into Wells Fargo yet. Now next month, going into the month of June, if you can break above May's highs, then that's a reversal on the monthly chart. But until then, trend lower, because now look at this. You're below. This is full time frame alignment to the downside. Below the quarterly open, below the monthly open, and below the weekly open for most of the week. So that's what full time frame alignment to the downside looks like. Most of the time, you're going to be selling it, not buying it. Okay. And Macy's. So Macy's obviously has been gotten hit very, very badly. Here's one retailer that has not been able to adjust with the times, and now you can see it's kind of consolidating here, but it's just not trending at all. So maybe this could be a longer term accumulation area, or this thing just goes to zero, right? So that's one of the dangerous parts here, is that you don't necessarily want to bottom pick this, because this can just keep going lower. Right now you have a bit of mixed time frames because you have that quarterly open right there, and it's sandwiched in between. This is what I mean by mixed time frame alignment. This is what creates the sandwich, right? So there's your monthly open, weekly open, quarterly open. Look at that. Tick, 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 right? That's called a sandwich, right? That's called mixed time frame alignment trading. That's what it looks like very, very often. And that's when you want to avoid things like this, because that's not going to go anywhere until that range gets broken. Okay, so now let's wrap up with these interesting names. LK, right? So Luckin Coffee. This thing used to be a high flyer. Everyone thought this was going to be the Starbucks of China. It was doing really well, back in Jan. It was up. It was a $50 stock. Now a $1 stock. All right. So this obviously has to do with financial shenanigans and bad reporting. But this company, man, not looking hot anymore, right? So I would not want to be bottom picking this. This could be worth buying at some point, or not, right? This can go to zero if at the rate it's going, because there's a bit of an issue here, because we saw the emerging markets ETF already. It has not been looking good the past couple weeks. It's been red weeks, right? So a lot of these Chinese ADR names, I think, have also been getting taken out to the woodshed because of the of all the fear mongering out of the Trump administration, talking about how they may delist Chinese stocks. So if you look at the Chinese stocks this past week, it has not helped their trends. Look at WB, Weibo, right? So they were already weak, prior to this week, but this week, look at that, 5 red selling days in a row. Momo down on Weibo, full time frame alignment to the downside now. Baba, so Alibaba, look at that, strong trend down this past week. Started, strong selling on the past 3 days. Baba, IQ, right, the Netflix of China, boom, looking like a week. That's not like a looking week there. Right, so strong red week, outside bar, right? You can see that outside bar in the week there for IQ, and you can just pull up all these Chinese ADRs. Here's Baidu. Look at that selling candle. So look at that big shooting star. Hits this line there, 50 period moving average. This is a weekly chart. So it hits the 50, and boom, big shooting star looks like this. Sorry, looks like this on the daily. That's the 200-day moving average. Okay, hits that, boom, comes back in again. So let's continue to watch that and see how that plays out. But right now, Chinese ADRs have not been performing well. So that brings us to the wrap of this week's video. Once again, I want to thank you for spending each and every week with me. I appreciate all the positive comments. If you have any questions, feel free to leave them in the comment section, either on YouTube or on the blog. The blog is thetradingedge.org. You can actually get a little notification when these videos drop, usually on Saturday evening, by going to YouTube and subscribing there. So click on the big subscribe button, or come over to the blog, thetradingedge.org. Sign up for the weekly newsletter, where you'll get an email on Sunday afternoon or evening with the link to the video, and as well as some commentary about the markets and what I'm looking at in terms of things that are related to trading. As always, I want to wish you a great week. You know, it's Memorial Day weekend in the States, so happy barbecue season, everybody. Enjoy the day off if you're on the stateside, and I look forward to hearing from you guys and talking to you guys again next week. All the best. Happy trading.